Hi, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot, but before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. To read more about it, please see the description below. Today's income pick, Westlake Chemical Partners LP, traded on New York Stock Exchange under symbol WLKP, is a great company that you don't really hear income investors talking about, but they should. The company continues to report solid financial results with industry tailwinds positioning it to deliver solid earnings and cash flow. The company has declared dividends for 35 consecutive quarters. Moreover, the company share price has great near and long-term growth potential. John, what can you tell us about Westlake Chemical Partners LP?
Well, Mo, Westlake Chemical Partners is a limited partnership formed by Westlake Chemical Corporation to operate, acquire, and develop ethylene production facilities. Its assets include 3 ethylene production facilities in Calvert City, Kentucky, and Lake Charles, Louisiana. And it's here that the company converts ethane into ethylene with an annual capacity of approximately 3.4 billion pounds, and it ships it along its 200-mile ethylene pipeline.
And just for those who don't know, what's ethylene and what is it used for?
Well, interestingly, ethylene is often been called the world's most important chemical, and it's a leading indicator of growth in the manufacturing sector. It's actually the building blocks of plastic. Ethylene is developed into 4 different compounds, which are turned into numerous household and other products. For example, polyethylene is used to make food packaging, bottles, bags, and other plastic goods. Ethylene oxide and ethylene glycol gets weaved into polyesters and becomes antifreeze for airplane engines and wings. Ethylene dichloride transforms into vinyl products used in PVC pipes, siding, medical devices, and clothing. And styrene is a synthetic rubber found in tires as well as foam insulation. Because of this, the company's products are always in demand. It has a protective provisions in a sales agreement with Westlake that provides a fixed margin of 95% on its products.
And this kind of security must translate into strong results.
Well, for the first quarter of 2023, which ended March 31st, Westlake announced that net income slipped 8% year over year to $14.8 million or 42 cents per share. Cash flow from operations activity, though, advanced 38% to $144.9 million. Master limited partner distributable cash flow was $17.6 million, a decrease of $1.7 million compared to the first quarter of 2022. Now, management noted that the partnership's performance in the first quarter reflects strong production volumes and a modest improvement in third-party ethylene margins from the fourth quarter of 2022, and that it remains well-positioned to deliver strong earnings and cash flow as it continues to benefit from robust production levels paired with sales agreements with Westlake that delivers, again, a fixed margin of 95% of its production. So looking at the remainder of 2023, management said that the partnership has already sold or contracted the majority of its third-party volumes at favorable prices compared to the second half of 2022.
Highlights the strong underlying fundamentals of the partnership and predictable cash flow to unit holders, right?
Certainly. The predictable cash flow helps juice Westlake's reliable high-yield dividend. In May, it declared a distribution of 0.47 cents per unit, or $1.89 on an annual basis for a yield of 8.63%, and that's more than double the current inflation rate of 4.0%. This also represents the partnership's 31st consecutive quarterly dividend. And in addition to providing a reliable high yield dividend, the 5-year average is 7.85%. So it's not like a one-off where it's just as a 1 year of high yield dividend. It actually has a history of providing a high yield dividend, and which means it also has a history of raising its dividend. It went public in late 2014. And from then until the pandemic, it actually raised its payout for 21 straight quarters. In the last quarter of 2014, it paid out 0.17 cents per unit. By the first quarter of 2020, the quarterly distribution had soared 176% to 47 cents per unit. But then COVID hit, of course. The fallout wasn't really all that bad. Westlake still paid a dividend. It just didn't raise it. It held it at 47 cents per unit, and it held it at that since then. Now, one reason it's able to do that and maintain that frothy dividend again is because of its stable and predictable cash flow, which we've mentioned a couple of times before, and that comes from 95% of its production at a fixed margin. This insulates the partnership from commodity price risk to the investment grade parent, which provides its flexibility in uncertain economic environments. And once the economic outlook becomes more certain, chances are good that Westlake will resume hiking its quarterly distribution.
That should also be good for WLKP's units, right?
Yeah, well, WLKP stock is up roughly 12% over its record pre-pandemic levels, and it surged 181% since hitting an all-time low of $7.73 in March 2000. More recently, Westlake Chemical Partners units are up 3% over the last 3 months, but they're down 3.5% year to date and down 8.5% year over year. Despite being in the red, the outlook for Westlake remains pretty solid, with conservative Wall Street analysts providing a 12-month unit share price target of between $26 and $29 per unit.
John, thank you so much. Just to recap, Westlake Chemical Partners LP is a leader in a lucrative niche industry. Thanks to long-term strength of its market position and proactive provisions of its sales agreement, Westlake is able to report a stable, fee-based cash flow, and it uses that cash to provide shareholders with a reliable dividend. That's 35 consecutive quarters and counting. And that's it for today. We'll be back with another video soon. If you want to read what John writes on a regular basis, you could head to incomeinvestors.com. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.